I intend to resign as party leader, as Prime Minister.
Justin Trudeau steps down and the Canadian dollar steps up. Will this last? Today, we're going to talk about both the short-term and the long-term outlook for the Canadian dollar and how what happened in Canada recently with the Prime Minister stepping down affects this big picture. Let's get started. Welcome to the Smart Money Dumb Money Show. I'm your host as usual, Keith Richards. I'm President and Chief Portfolio Manager and Chief Cook and Bottle Washer for Value Trend. And today we're going to look at some technical factors and some background as to why I think that the Canadian dollar will in fact have more downside to come. Even as recent as October, I put out a video called Should I Buy US Dollars, where I talked about the probability of the Looney hitting 68 to 69 cents. I was right about those calls. In fact, I started making those calls about 3 years ago, and we're going to talk a little bit about why I made those calls and why I've been accurate so far in that outlook. Let's get started. Well, first of all, I want to start off with the short-term picture. And we have to keep in mind that any sharp move, like the Loonies, tends to reverse itself when it gets too aggressive in that move. So we call that, in technical analysis, oversold or overbought movements, where things have moved too fast, too far in a short period of time. The long-term trend is what we're interested in for the longer-term outlook, but there are always short-term anomalies of overbought and oversold situations. This is a chart that readers of my blog, which is available at valuetrend.ca, will be familiar with. This is a chart of the Canadian dollar over the past year, and what we're looking at is a daily chart with three indicators. The first indicator is called Bollinger Bands, and that's these lines right here, and I'll explain what they are in a second. The next is stochastics, that's this line, and RSI, which is this lower pane. By the way, I am about to produce a 5 or 6 part series that talks about the basics of technical analysis, and I'm going to cover some of these indicators in that series, and I'm really interested in hearing from you guys what you'd like me to cover in that Basics of Technical Analysis series. So please comment below and give me ideas on what you want to hear me talk about, because it's really about you and what you guys are looking for in that series. Anyways, back to the near-term outlook of the Looney. Now, let's start with Bollinger Bands. Bollinger Bands are basically indicators that tell us how far above or below a 20-day moving average, in this case, the market is from a statistical point of view. It uses 2 standard deviations of volatility outside the movement of a 20-day moving average. So the theory is that when a market gets to 2 standard deviations away from the 20-day moving average, in this case, we are either oversold or overbought. Now, keep in mind that when we're looking at Bollinger Bands, a market can run along the top or along the bottom for extended periods of time. Nevertheless, it's telling us that it's at an extreme end of its normal volatility, even if it's a relatively short-term period of volatility, because it's only a 20-day moving average. But you can see in this case, often when the market moves at the top end of a Bollinger Band, it'll pull back, or if it's at the bottom end of the Bollinger Band, it'll move back up. Here is a case where it ran along the top, but it didn't last forever and eventually moved back down. Now, there's 2 areas that you'll see Bollinger Bands work in a predictive manner, and that is that either we see the market move back around the 20-day moving average, as it did back in September of 24, or it moves like here, right back down to the bottom of the standard deviation points on that Bollinger Band. In other words, it moves to the bottom Bollinger Band. So what we're looking at here is the Canadian Looney, or Canadian dollar, was riding the lower band because it was in free fall mode. Well, all along that point, it was oversold, but at some point it began to cluster. It formed a little bit of a basing formation on the daily chart. At the same time, stochastics, which is a very, very quick moving momentum indicator, was also signaling that it was a little bit oversold. It began to hook up at the same time as RSI, which is more of a medium looking momentum indicator, also began to hook up. When that happened, we got a signal that the Looney would probably move up. And in fact, it has. Here's the 20-day moving average, and it's moved up to that point. I'll zoom in a little bit. Now, the question right now is, will the Looney stop as it did in these circumstances back in November and December, where we saw a bounce off of the momentum indicators and a bounce off of the lower Bollinger Band, and it moved right back up to the 20-day moving average, but didn't get much further. That could be the case right now, or it could stop at the 20-day and then carry through and eventually hit maybe the top end of the Bollinger Band. I can't tell you what's going to happen, but what I do want to offer you in this explanation is that the near-term outlook is for some type of a short-term movement on the Canadian dollar, but I don't think that it's going to last. And we'll get into that next. Let's take a look at the long-term chart. Now, again, I have been writing a blog on my website at valuetrend.ca for more than 20 years. And on that blog, way back in 2008, I started charting this exact view of the Canadian dollar versus the US dollar. So you'll see my markings all over this chart, and all of those markings represent my thoughts going way back, in this case, to 2008. So we can see that at the time, back in 2009, I had identified that there was a support level, coming back to 2005 in this case, there was a support level at around 78 or so cents. And in fact, the Looney climbed and then fell right back to 78 cents and found support. So there's a principle that old support becomes new resistance if it's broken. And that's exactly what happened. In the mid to late 2000s, right around when the last Prime Minister was in place, we saw Looney trading often around par. In fact, that was fairly consistent. We saw quite a period of time between 2009 and 2015 where the Looney was trading roughly 105 to around 95. So it was pretty solid at the time in comparison to the US dollar. It began to fall, coincidentally, shortly after the new Prime Minister came in, and based on a fairly exuberant spending and debt program that the new administration had in mind. As well, of course, the Canadian barrel of oil was affected because in 2015, oil prices were falling. Nevertheless, oil prices did recover, but the Looney has not, and you can see it formed a resistance point around that very old 78 cents point. Well, a trading range was developed between 78 and, as you can see, I've marked off here, 72. And that was a bit of a range. Sometimes it would overshoot it, but generally speaking, 72 was definitely a very strong point of support for the Looney. And in fact, on all of my blogs going back 5+ years, I have talked about that as 72 cents was important not to break. In recent blogs since 2018 and on some of my videos, I noted that I felt that 72 would in fact break and we would target 78. Well, that's what happened. We broke 72 and look what happened. As soon as it broke, it fell hard after that 72 cent break. Well, what we're looking at right now, and this is where my long-term technical view comes in, is that twice back during COVID and also back in 2016, which is right around when oil was falling like a brick, so to speak, we saw a 68 cent Canadian dollar. And I do think right now, despite any near-term blip on the upside, we will eventually get very, very close to that 68 cents again. Okay, 12 reasons why I think that the Looney is headed down to my technical target of around 68 cents. Well, I have to rip through these pretty quick because to explain each one of them in detail, you'd be watching this video for another 3 hours. So let's just go through them quickly because I'm sure that most of these reasons are pretty familiar to you now, which is why only 16% of the population actually had supported Justin Trudeau in the final year before he just resigned. So, unsustainable population growth. Anybody going to argue with that? Massive debt burdens. In fact, our debt right now as a nation is the worst in our entire history. Household debt, 100%, a little over 100% per capita, meaning per person, 100% of their assets is debt versus 80% in the US. That's an average. Weakest economy in the G7. We have a stricken private sector, and in fact, a lot of venture capital is leaving Canada right now with shrinking employment and shrinking profitability. In fact, we are the lowest productivity in the developed world. We have a bloated public sector. That was one of the objectives when Trudeau came into Parliament a number of years ago, is he expanded government. And big government is not necessarily a recipe for economic success. We have collapsing investment by venture capital, as I mentioned a minute ago. We have a housing problem, which I think most of you are aware of that. We, in fact, have the highest priced housing in the world. That's something I learned from Rosenberg, and it was very interesting to hear that. We have, as I mentioned, the highest overvalued real estate in the world. We have rising capital gains taxes. We have new carbon taxes, which in turn have caused sticky core inflation. Now, everybody talks about CPI falling, but core inflation is our groceries and the stuff we use day to day, and that is directly impacted by carbon taxes because of the shipping and whatnot costs. I'm going to ask you a question. How is Canada going to survive the trade tariffs with a leader who literally in the United States is despised by the US administration? And we have a leader who has prorogued Parliament while these trade tariffs are going on until the end of March, and then we're going to have a Canadian election. We have a setup for at least a 6-month pressure on the Canadian Looney. And this is very important to understand. The timing could not be worse. Now, I want you to hear something that Brian Lilley had to say about this problem.
It doesn't matter who takes over. Trudeau and the Liberals are in a whole heap of trouble.
So in conclusion, we do have a short-term reason for believing that the Canadian Looney will have some upside. Whether we've seen most of that upside or not is to be seen, but my suggestion is that whether we get half a cent or 1 cent, we're not going to get a return anywhere near to that old support level of 72 cents on the Looney. Now, next thing is we have a setup for very probable pressure on the Looney over the coming months. I've explained why, and Brian Lilley, I think, explained why I think that replacing Trudeau in the near term is not going to be the answer. I'm sorry for getting a little political on this video, but politics do matter when it comes to the dollar and it comes to economic policy. And that's been our problem. And I do hope that we are able to solve that problem and negotiate with Trump, because I think Canada has a lot going for it. And we really have an opportunity to negotiate a fair deal with the US and see our Looney move back into that 72 to 78 cent trading range that it had been in for many, many years. Don't forget to leave your comments on what you would like to see the upcoming Technical Analysis Basics series include. Thanks for watching.